So this is where we left off yesterday. So I actually went back and figured it out. I knew this was the problem that we were supposed to record accounts receivable at its original amount because we never received the money, right? So by us taking that bad debt out, well, that's also money that we never even had in the first place. So you were supposed to record it at what it was before you took the bad debt. So the unadjusted version amount right there, which was the 1531.95. And of course, this one was the most obvious one. Goodwill. You can't do fair market value for goodwill because that's what you originally purchased it for. All right, it's only when you sell the goodwill then it will change to fair market value. So in this case, it's just the original values, and then it should pan out completely evenly to zero. Okay, so that was the $88 that I was missing, was just putting the fair market value to actually the historical cost for goodwill, and actually using the unadjusted amount for accounts receivable, because we never received the money in the first place. Even if though we took money out, we never received the full amount anyways. So that's the most important thing here. And of course, your bank, right, is a total of 13,952.60. So that's just a few little things right there. I don't know if you guys saw it yesterday or not, but I did upload the answers in the adjustment section. And I just highlighted it so you guys can figure out that this was the discrepancy right here. Okay. So, yeah, so this panned out completely even. Now, once again, I'm still not going to test you, obviously, on this one because it's one of the most difficult worksheets that you can ever do or compile. The more easier ones is going to be your income statement, statement of equity, and your balance sheet, which is the only thing that you need to require, because this statement right here does not affect anything that you do on going on forth. It has nothing to do with the closing process. Okay? In this case, you're actually done with the financial statements. Once you're done, you don't need anything except for the balance sheet, so then instead of having to type everything out again, you already have everything the way that you need it. Okay.
Can you please repeat again the correction so I can make a note on the side? You said the accounts receivable is what?
The unadjusted amount. Mm-hmm. Before we took the bad debt out.
And then the goodwill.
The goodwill is at historical cost, which is $2,100.
Okay, thank you.
Okay. So we are finally reaching the last couple steps here. Step number 9 is to finally close out our books. Now, if you guys remember, closing out our books constitute to zeroing out all of our temporary accounts. So if you guys remember, right, what we're going to do is for step number 9, we're going to zero out all of our expenses and all of our income to the income summary. Okay. If that confused you, we're going to zero out all of our expenses and all of our revenues to the income summary. Okay. Then we're going to take our income summary and we're going to zero it out to equity. Okay. Now, what does it mean to close out my accounts? Simple. You just zero them out. Okay. So in this case, right, how do you zero out something? You're going to use the opposite direction. So since expenses normally have a debit balance, we're going to credit all of the expense accounts for the amount of the balance that is currently in each account. Okay, and we're going to zero them out to income summary. Okay, so the very first step that we normally do is to zero out our revenues first, just because that's in line with what we have to do first. in the order. Okay, so if you remember, since revenues normally have a credit balance, that means we're going to be um, debiting all of our accounts, our revenues to the income summary. Wait, hold on, Kim. I think that's Kim. Okay, so we're going to be debiting all of our revenues to the income summary and crediting it into income summary. Okay. So how do we do that? Straightforward, right? This is what I'm going to have you guys do so we can kind of kill two birds at one stone, right? We're going to journalize, and then we're going to just update our ledger at the same time. Save us some time here, okay? So the very first one is we're going to close out all of our revenue. So that means since we've done our trial balance or we've done our balance sheet and stuff like that, right? You're going to have to go through every single account and zero them out one at a time, okay? So obviously this little section right here is definitely not enough space. And of course, this is definitely room for to definitely insert stuff here. So we're actually going to block that off real quick. And then we're going to start our closing process on the next general journal. Okay, so there we have that. So we're going to start off on page 24. Okay, it is 6:30. Okay, so this is going to be the official start of our closing process. So what we're going to do is we're going to zero out every single account that exists in my revenue section. Starting off with sales for regular coffee. Okay, so I'm going to go ahead and type in, because right now it's at a credit balance. In order to zero this account out, we need to debit the amount or debit the account for the amount that's in there. So right now it is at $13.94.96. Okay, so what we're going to do is we're going to debit that account, right, to zero it out. So this is sales for regular coffee. So this is going to take a lot of typing just because you can't copy and paste all of these accounts. So you're going to be looking, it's going to take you forever to look these all up. And most of it is all credited anyway. So it doesn't matter how you do it. At the end of the day, it will take some time. So sales for my regular coffee is account number 450. Okay. And I'm going to debit the amount for the $13.94.96. $13.94.96. Okay. Since I've journalized this, I'm going to go ahead and update my ledger at the same time. Okay. And I'm going to go ahead and write closing. Okay. Close. General Journal 24. And we're going to debit for the $13.94.96. Okay. And that should give you a zero balance. Okay. So that's what we're going to be doing. We're going to do that for all of our revenues, all of our cost of goods sold, and all of our expenses. And we're going to have a nice clean slate. We're going to zero out all of the accounts. And at the end, we're going to see something really cool. Okay. So let's go ahead and work on each account one at a time to zero out all of our accounts. Okay. So the next one we have here is the sales for Supreme Coffee. Okay, account number 40100. And we're going to debit the account by how much?
1436.40.
Okay, 1436.40. Okay. We're going to close this account, General Journal 24, for 1436.40, which should bring my account to 0. Okay. Next account we have is our sales for the ceramic coffee mugs, which is account number 40150. Okay. And then let's take a look at how much we need to debit this account for. We need to debit this account for how much do we need to debit this account for?
Sorry, typing. What was it?
We're on ceramic coffee mugs. How much do I need to debit my account for?
176391.
1763.91. Now this is where you can make typos here, so make sure that you are pretty careful. This is the closing. $1763.91, which should result in a 0 balance. $1763.91. The next account we have here is sales sales medium regular coffees, account number 40300. Okay. And then let's take a look. How much do we need to debit this account for?
$5,221.76.
Okay, 522176. 522176. For 522176, which then should bring your account balance to 0 for 522176. All right. Then our next account is going to be sales large regular coffee. Account number 40350. Okay. And let's see. How much do I need to debit this account for?
$6503.25.
6503.25. 6503.25. $6503.25. Okay. 6503.25. Good. Okay. Then the next account is going to be sales medium supreme coffee. Account number 40400. Nope, 450. My bad. Okay. And let's see. How much do I need to debit this account for?
Is it 77?
Yes, 665577. Yes. Okay. Okay. And that should zero out your account. Next account we have is our sales for the large Supreme Coffee. Account number 40500. Okay. How much do I need to debit this account for?
7524.44.
752444. 752444. $752444, which gives us a zero balance. The next account we have here is sales returns and allowances. Now in this case, this is on the credit side because in this case it's on a debit, right? We need to skip this account for now because this account is going to be on the credit side. So I'm going to skip returns and allowances and sales discount. But we do have delivery income, and that's the last account that you're going to be debiting because it has a normal credit balance. So delivery income, which is account number 48,000. For a total amount of, I believe it's $300. Okay. 6:30 close general journal 24 for $300, and that should bring your account balance to 0. Okay. Then we're going to do our last two remaining accounts since this is on the credit side. You're going to have a sales returns and allowances that you're going to have to credit. So sales returns and allowances, which is account number 45,000. Okay. And this time, how much am I going to credit my returns and allowances for?
$19.96.
$19.96. Okay. Okay. So therefore, in this, you should put 6:30 close general journal 24, and we're going to credit it for the $19.96, which in this case should definitely zero out your account. Last but not least, well, actually, second to last but not least, you're going to be crediting the sales discount, which is account number 46,000. Okay. And how much am I going to credit this account for?
$1,900.79.
1979 for my sales discount. Nope, not debit, but credit 190079, which should bring your account balance to 0. Last but not least, right, we're zeroing out all of these accounts, right? We're closing them out to our income summary, okay? Which, where is our income summary? Where is our income summary account?
Isn't it in assets?
It's not in
No.
assets. Mm-mm.
Is it the ledger?
Yes, but which account type would it be under?
Cash flow? I don't know.
This is income summary.
Equity.
Revenue?
Okay, so in this case, if you use your chart of accounts, it's underneath equity.
Mm-hmm.
Okay, because once again, this is us closing it out because at the end of the day, we're going to close our income summary out to equity. So once again, this is, if you guys remember from way back when, this is the same thing as retained earnings. Retained earnings is where a corporation takes their profits and decides, are they going to reinvest into the company or are they going to distribute it as dividends? That's the same thing here. Are we going to reinvest into a company or is the owner going to take that money out? Okay. So in this case, it is going to be right here, income summary. Of course, there's no account balance there because this is what we have to enter in there. Okay. So income summary, all right, which is account number 19999. Oh wait, that's not right. That should be 39999. Okay, so 39999. Okay. All right. Now this is where you have to do. You have to figure out, well, how much are you going to put into income summary? So if I click and drag and highlight all of these cells right here, I know that this gives me a grand total of this number here down below. So I can do it that way and subtract it out. Or I'm just going to do this inside the cells. Just because the equal sum minus an equal sum, I usually have trouble with that formula, so I don't do it. But if I were to be able to do that, I could go like this and subtract this, subtract that. And what should my credit to the income summary be?
I got 28,879.74.
28,879.74. Okay, and I'm going to hide this one because I put it inside the cell. I could have done it on the side, but it's okay. This is easier. Okay, so 28,879.74. So that's what you're going to put here. Right? This time we're going to say close out all revenues. Okay, for June. Okay, this is page 24, and because it's credited for 287974. Now again, because it's an equity count, this most likely would have a, this one will fluctuate, right? It could have a debit or a credit balance, depending if whether you had a profit or a loss. In this case, you can just go ahead and leave it into your credit column, because right now that's exactly what we have. We currently have a credit right now of the 28,87974. Okay. All right, and then I'm going to go ahead and make a note in my journal here that to close out revenues to income summary for June.
Oh, sorry. Can you please go back to the note? Yeah.
Yeah, sorry. I'm just counting the lines.
Oh, no, I know. Okay, thank you.
Mm-hmm. Okay. And what I'm going to do for you guys now is I'm going to let you know that to zero out all of your expenses, think about it. You guys have a lot of expense accounts. So in this case, you're better off safe than sorry to just cross this all out and start on page 25. And that's exactly what I'm going to do here. I'm going to go ahead and draw my line, and I'm going to start on a new page because we have so many accounts that I don't want to squeeze it in there and then end up breaking it halfway. So I'm going to cross this section out. Okay. And we're going to start on the next page here. Okay. And we're going to zero out all of our expense accounts, right? Since we're going to be crediting, because our normal expense accounts normally have a debit balance, we're going to credit all of our expenses and we're going to debit to our income summary. Okay, which we know to be 39999. Now in this case, this is going to be an equal sum, okay, because I have to list out all of my expense accounts and I'm going to credit them one at a time. So starting off with your cost of goods sold is where you're going to begin. Okay, starting with cost of goods sold for regular coffee, which is account number 50050. How much am I going to credit my cost of goods sold for the regular coffee?
Um, 1,407.68.
140768.
Wrong cell.
Me?
Yeah. I think you're one below. Let me
Oh,
optimize.
thank you.
You're welcome.
140768. 140768, okay. And let's go ahead and update our ledger as we go. So we don't have to do it again at the end, right? We'll do it together at the same time.
So these
Close.
are gonna be credits, correct?
Yes,
Okay.
yes. Because they normally have debit accounts and we're trying to zero them out so they're all going to have credits.
Okay.
And we're on page 25 for 1407.68, which then again should bring me to a zero balance. Okay. Next account we have here is going to be the cost of goods sold for the Supreme Coffee, which is account number 50100. Right? How much do I need to credit this account for?
Go ahead, Sanya.
1487.60. Sorry.
1487.60. For 1487.60, and that should bring your account balance now to zero. Next, you should have your cost of goods sold for the ceramic coffee mugs. Account number 5050150. Okay. How much should I credit my account for?
1183.84.
1183.84. Oops. 1183.84. All right, this should, you might need to do your formula for this one. So this plus any debits, subtract any credits should give you zero. So let's see what's next. We got the cost of materials. So first account we have is cost of materials for the medium coffee cups. Okay, which is account number 51200. And how much am I going to credit my account for?
The 286.70.
286.70. Good. All right, so let's go ahead and zero that out. We're going to close this account, General Journal 25, and we're going to credit for 286.70. Let me make sure I typed it in right. 286.70. Okay. So you may have to enter in your formula once again, because you should get 0. Okay, so our next account's going to be the cost of materials for the large coffee cups. Account number 51250. How much do I need to credit my account for?
351.63.
350, ooh, 351. Do it again. 351.63. Oh, nope. 351.63. For the 351.63. Which should bring your account balance to 0. $351.63. Okay. Then we have the cost of materials for the sugar. Okay, for account number 51300. We're going to credit my account for $43.20. Close General Journal 25, credit $43.20. So that should bring your account balance to 0. last account we have in this section here is going to be the cost of materials for the creamer. Which is account number 51350. Okay. How much am I going to credit my cost of materials for the creamer?
Is it 359.26?
359.26. 359.26. Okay. Right here. June 30th. Close. General Journal 25 for 35926. And that should definitely give you account balance of 0. 35926. Okay. Okay. We're not going to stop here. We're going to do a continuation because this is all expenses, right? Cost of goods section is just a small section. I just separated because there's a lot of accounts under expenses. So we're going to continue on crediting out our expenses by moving on forth to your operating expenses. So first account we have here is your advertising expense. Account number 60,000. Okay. How much am I going to credit my advertising expense for?
The $185.
185 even. Okay. And then I'm going to plug and update my ledger right now, saying we're going to close this account, General Journal 25, for a credit balance of 185. So that should give me a 0 balance in my advertising expense account. Next is going to be bank fees. Okay. Okay, which is account number 6060100. And how much are we going to be crediting my bank fees for?
369.64.
36964. 36964. Okay. Three six 964, which should then give me an account balance of 0. Three six 964. Next account we have here is your business expenses. So we're here, business expense. Okay. Account number 6200. And for what amount am I going to credit my business expense for?
128278.
128278. June 30th, we're closing this account out. General Journal 25 for 128278. Which should give you an account balance of 0. Okay. Next, we have here's freight expense, which is already 0. So no need to close that account out because it's already 0. Okay. Next, we have is insurance expense. Okay, which is account number 60400. Okay. And how much am I going to credit my insurance expense? $195.83. Okay. $195.83, which then should give you your account balance to be 0. Almost done, guys. Almost done. Next is going to be labor expense, okay, which is broken down to subcontractor expense and temporary labor expense. So let's see, subcontractor. Which is account number 6510. And how much am I going to credit my subcontractor expense?
$1,890.
Yep, $18.90. So here you go. June 30th, we're closing this account for General Journal 25 for the $18.90 credit. Which gives your account 0. Okay. So we have our temporary labor expense as well. For account number 60520. How much am I going to credit my temporary labor expense?
That's $252.
$252. Okay. Close General Journal 25 for $252, which should give you a zero balance. Next we have is license and a permanent expense. Oops. Okay, for 6,600. Okay. How much am I going to credit my account for?
375.
375. Okay, 630. Close. General Journal 25 for 375, which should bring your account balance to zero. Okay. Next account we have is loss on disposal of asset. Loss on disposal of asset. Okay. Account number 60700. And for the amount of $2,000. Okay. 030, close. General Journal 25 for the credit of 2,000, which should give you an account balance of 0. Our next account we have is office supplies expense for account number 6750. Okay. And this is going to be for the amount of $70. Which then should result you again to a 0 balance. Okay. I think we have just a couple more, guys, so we're almost there, almost at the end. Okay. We have payroll expenses, which is broken down into salaries and wages expense. Which is account number 60810. How much are we going to credit our salaries and wages expense account?
$884.
884. which then that should definitely bring your account balance to 0. Okay. Next we have is commissions expense. For account number 60820, right? For the amount of, oops, $411.96. $411.96 to give us our account balance of 0. I think we have like 5 more accounts left, so almost there, guys. Okay. After commissions expense, we got payroll tax expense. Okay, which is account number 60830. All right. And for how much am I going to credit this account for?
$97.98.
$97.98. So I'm going to close that out. $97.98. Which should definitely bring my account balance to 0. Okay. Purchase expense is already zeroed out, so no need to close that account out. Purchase returns and allowance, once again, is also the same situation. No need to zero that out. We didn't have any purchase discounts. Okay. Nor did we, we did have rent expense. Okay. So there's something we can put here, rent expense. Which is account number 62,000. Okay. And rent was $1,500. No travel expenses yet. Okay, so the vehicle that we got so far has not, nothing has happened to it so far. Okay. Utilities, we just turned on our water, gas, and electrical, so we won't be receiving the bill until July. Okay. And then the last three accounts, so it's again is your bad debt, depreciation, and your amortization. So let's go ahead and put those in there. Oops. So we got bad debt expense, which is account number 65,000. Okay. For $76.60. We also need to zero out our depreciation expense, which was account number 66000, for a total of how much do I need to credit my bad debt, my depreciation expense for?
$625.95.
625.95. Okay, so 625.95. We're gonna close this out. General Journal 25 for 625.95. $625.95. Last account that we have here is our amortization expense account. So which is account number 66,500. Okay. So that should be for a total amount of your $11.67. Okay. Which brings your account balance to zero. Okay. And since we reached the bottom of my journal, I'm going to go ahead and place my note here saying to close out all expenses to income summary for June. Okay. Save your sheets. Okay. Now that we finished our journal here, we need to sum up our total expenses that we are going to be crediting. So in this case, let's go ahead and do that real quick. So I'm just going to go ahead and do a simple formula here. I'm just going to go equal sum to get my total expenses. What is the total amount of my expenses?
Is it 15,656?
Let's see. 15,000. No, I did not get that.
I got 300. I got 600.
Did you add an extra number somewhere? Sonia, what did you get?
I got what you got, the 15,348.32.
Okay.
Same here.
Okay. So you could have typoed somewhere in one of these numbers. Because you're off by 300, right?
I got it on 369.
Oh, okay. Perfect. Okay. All right. Oh. So now we've done that. We need to go to our income summary because we need to debit our income summary. Okay. So here we are. It is June 30th, and this was to close out all expenses for June. Okay. General Journal 25 this time, and we're going to debit the account for the 15,348.32. Okay. And of course, if you work your formula right, because your income summary should normally have a credit balance in this case, right? Because our expenses did not exceed our revenue. So in this case, you're gonna add any credits and subtract any debits, which should give you a total of 13,531.42. Hold on, is that right? 15,531.42. And where do we see this number? Where have we seen the 15,531.42?
Is it 15 or 13?
13. So I keep saying 15. Yeah, my screen's so small. 13,531.42. Where have we seen that number?
On our income statement, right?
On our income statement. So that means we successfully. Oh, wait, I'm in the wrong one. We successfully. Sorry, give me like 2 seconds to wrap my head around this. Income statement. That's exactly what we saw. This was our profit. So the 13,531.42. So that means we successfully closed out our accounts correctly, making no mistakes, no typos or anything, because now our income statement matches our amount in our income summary. Okay. All right. Awesome. Okay. Now I'm gonna give you a choice now because right now it's 10 o'clock. Do you guys want to push for the next 30 minutes and then be done for the rest of the day, or do you want to take a break now and then resume the scenario from here?
Let's finish
Let's
it.
put,
Let's finish.
Okay. All right. Okay. Well, so now that we finally zeroed out our revenues and we zeroed out our expenses, right? So now we need to zero out our income summary to our equity. So in this case, what is my current account balance in my income summary?
The
13,551.
3142.
That's the amount, but what kind of balance does it have? Like a debit or a credit? We have a credit balance. So how do we zero out our income summary?
Debit the same amount.
We're going to debit the income summary. Okay. So in income summary, which is account number 39999, okay, which is for the total amount of the 13,531.42. And where are we going to place it? Where are we zeroing out our income summary to?
To the equity,
Yes, to the owner's equity account, because this, in a sense, is us reinvesting our profits into our equity. Okay, which then brings my account to, okay, so there I gotta journalize it, and I'm gonna go ahead and write to close out income summary to equity. Okay. And of course, let's go ahead and do that. So we're going to close out to equity. Okay. General Journal 25, and we're going to debit the 13,531.42, which then should give me an account balance of 0. Okay, so there we are zeroing out. Once we've done that, right, we're reinvesting this money into our company. So by doing so, we're gonna debit the account, okay, and then we're going to credit our our owner's equity. I just wrote income summary. Actually, I should write income summary for June, General Journal 25. Okay. And we're going to credit the account by was it 13,531.42. Okay. So as our debits and our credits act, right? Since we are looking at a credit, which is going to increase my accounts in my account right here, which is the owner's equity. Therefore, I have now a total of 43,531.42. Okay. Now, of course, we know for a fact that that's not what my equity equals, right? If we go to my statement of equity, I am missing one component. And what is that? If I go to my statement of equity, I have one missing component to get me to my 40,531.42. And that is to take, yeah, we need to take the owner's withdrawal because we ended up taking money out from the company, and we need to include that and journalize that. So in this case, we are going to credit our owner's withdrawal and debit our owner's equity. Okay. Okay, we're decreasing. So this is where, if you guys remember from way back then, this is where an owner's withdrawal is going to decrease the owner's equity. Okay, by $3,000. Okay, so there's owner's equity, and we're going to go ahead and say this is an owner's withdrawal. Okay. Account number $32,000. 32,000. Okay, for $3,000. Okay, and of course I'm gonna put here in my note to close out owner's withdrawal to equity. And so on and so forth. We're going to go ahead and update my ledger account. Okay. Close. You can say close here as well. Which is the $3,000. Which should give you an account balance of 0. Okay. And we're going to take that amount and we're going to debit this amount into our owner's equity. Actually, you could just write owner's withdrawal. Okay. General Journal 25. Okay, and we're going to debit this by $3,000. So your formula should work, right? And it should give you your total equity to be $40,531.42, which is the exact number you got in your statement of equity. Now everything is starting to become very like nice and neat. Everything's making sense. Everything is coming together, right? We have a lot of references points, making sure that our accounting is accurate, right? We got the income statement to reflect in our income summary. We got the statement of equity, right, to match our equity, okay, by closing out all of our books, okay? So the last thing that we got to do is to do our post-closing trial balance, okay? So I'm going to go ahead and draw a line here to say we are done and completed this entire thing, okay? Yes, was that a question?
You're moving a little bit fast. Can you just give me 1 minute?
Yeah, of course. I'm going to stop here.
Can I see the income summary for quick, please?
Okay, just give me 1 second. Close books. Okay. Income summary.
I gotta catch up on that one too. If you
Yep, go for it. Take your time.
Got it, thank you.
Okay, so here for the income summary, right? We started off by crediting our revenues. Okay, then the next step was we debited our expenses. And then once we debited our expenses, we had a total credit balance of the $13,531.42. And with that, we decided to debit that because we're going to zero it out to our owner's equity. So that made us debit the account. Okay. Here, the owner's withdrawal, we had to credit the owner's withdrawal, so we're able to debit it into our owner's equity. Okay, so that's the exact trend right here, right? We had a beginning balance or an original investment of $30,000. Since we had a profit, right? When we debited our income summary, we credit the income summary to our owner's withdrawal, which gave us a new equity of 43,531.42. But we also had to update our owner's withdrawal because we took money out of the company. So this is how we reflect that we actually took money out of the company. And here since we took money out of the company, that's going to debit an owner's equity account, right? It's going to decrease the account. So that's why now that we decreased it by $3,000, we now finally get the $40,531.42, which we solved in our statement of equity. Okay.
I'm good. You can move on.
Okay. And save your journal because that's it. We're done. It's exactly 25 pages. Okay. Of hard work, blood, sweat, and tears, guys. We are finally done. So you can close your journal out. Okay. You could also go ahead and close your ledger too because we're done with the ledger. Okay. So all we have left is going to be our last statement, which is going to be the post-closing trial balance. Now, here's a shortcut that I like to do. You don't have to do it unless you want to. But what I do is I actually just delete this worksheet right here. Click OK. And I go into my balance sheet. Oops. I go to my balance sheet. And I just simply make a copy of it because all the numbers pan out, right? You didn't touch anything in your assets. You didn't touch anything in your liabilities. Your equity, right, is already there, and all of your revenues and your expenses, they're all zeroed out anyways. So at the end of the day, right, all you're really left is your assets, your liabilities, and your new equity, which we've already solved already to be 40,531.42. So in this case, right, I can just simply make a copy of it and just format this to be the post closing trial balance. I just change the name. Okay, so it says right here balance sheet. I'm going to change that to post closing trial balance, right? It is as of June 30th. Oh, wait. Okay. And okay. And again, I'm going to format this to say this is supposed to be your debit column, right? And this one is supposed to be your credit column. Okay. Things that you don't need is a total asset, so you could just take this and delete it. Okay. And you don't need a total liabilities. Okay. Right. And then where it says total equity, right? You don't need this, but you definitely want to change this to owner's equity. And make sure you format it in the way where it doesn't look different. So this is going to be here. Oops. Nope. This one. There you go. You don't need that to be bolded. And this extra gap here you can get rid of. Okay. And of course, all you got to do now is just revise your formula. Okay, you don't need your total credits, your total equity either, so you can delete that. And you just have to revise your amounts here, right? Revise the formula to be equal sum to all your total debits and apply that to your total credits, and you should get 79,112.90 on both sides. And that's what I like to do to save you some extra time, is you to take your trial balance. Once again, you never touched anything in your assets. You never touched anything in your liabilities. And your equity, we solved it to be the 40,531.42. So that's the only thing that you're going to be changing here. And you just tally up your total debits and your total credits, and it should pan out evenly. And that's it. We solved for our post-closing trial balance, and that was step 10 of the accounting cycle. Now we are completely done with Coffee Cafe. Yay. Okay. Any questions on Coffee Cafe?